There's a baker named Sarah who runs a small cake business out of her kitchen in Henderson. She started with birthday cakes for friends, then a few wedding orders, and now she's doing 15 or 20 cakes a month. One Saturday, a customer comes to pick up a tiered wedding cake, slips on the front porch step, and breaks her wrist. She files a claim. Sarah assumes her homeowner's policy has her covered because that's what homeowners insurance is for, right? A guest got hurt at her house. The carrier denies the claim, not because Sarah did anything wrong, but because that customer wasn't a social guest. She was there for a business transaction, and almost every homeowner's policy excludes losses that arise out of a business conducted on the premises. If you run anything out of your home, even something small, this is the gap you need to understand. And the good news is it's usually a straightforward and inexpensive fix once you know it's there. If you don't know who I am, my name's Jim Eddington, and my agency helps individuals and businesses with their insurance every single day. This topic sits right on the line between personal and business insurance, which is exactly why so many people get caught by it. You think of yourself as a homeowner who happens to sell a few things on the side. Your insurance company sees a business operating inside a home. These are two very different things to an underwriter, and the policy is written from their point of view, not yours. Let's start with why the homeowner's policy says no. A standard homeowner's policy is built to cover your home and your personal life. It's not built to cover a business, and it says so directly. Most policies contain what's called a business pursuits exclusion or a business activity exclusion. The wording varies by carrier and by form, but the idea is consistent. If a loss arises out of a business conducted on the residence, the policy can exclude it. That applies to liability, like the slip on the porch, and it can also apply to your property. The professional oven, the inventory, the equipment you bought to run the operation, a lot of that sits outside what a homeowner's policy is meant to cover. Here's the part that surprises people. It doesn't matter how small the business is. A few $100s a month in side income is still business income, and the activity that generated it is still a business activity. Some policy forms have small income exceptions for casual activities, but don't build your plan around that. Once you're regularly taking paid orders or serving customers, you're in business territory. So the question isn't whether you're a big enough business to worry about this. It's whether there's any business activity happening at all. If there is, the homeowner's policy you already have probably has a hole that lines up exactly with the thing you're most likely to get sued over. Now, a lot of homeowners' policies do include a small amount of coverage for business personal property. Often it's something like $2,500 or $3,000 for business property kept at the home, with a much smaller sublimit for property away from the home. Now, that's better than nothing, but put it next to a real home business and you see the problem. $2,500 doesn't go far if you've got a commercial mixer, a professional oven, refrigeration, and a few $1,000s of ingredients on hand. And that small property allowance usually does nothing for the bigger risk, which is liability. The slip on the porch, the customer who gets sick, the claim that someone got hurt because of your product. That's where the real business exposure lives, and that's the part the base homeowner's policy is designed to push away. So the small built-in allowance isn't a solution, it's a hint. It tells you the policy already knows business property might be present, and it's drawing a tight boundary around how much it's willing to touch. Here's where the fix starts. For a lot of small home businesses, the right answer is an endorsement added onto your existing homeowner's policy. Depending on the carrier, it might be called an in-home business endorsement, a home business endorsement, or a permitted incidental occupancies endorsement. Those aren't always identical, so the details matter. What it does, if it's the right endorsement, is bring some business coverage back into the policy that the exclusion otherwise pushes out. The broader versions can add liability coverage for your business activities, raise the limit on your business property, and sometimes include business income coverage if a covered event shuts you down for a while. This is usually the cheapest, simplest path, and for the right business, it's the right one. Think low foot traffic, a handful of customers, modest equipment, and a service or product that isn't especially high risk. A person who does bookkeeping from a home office, sells non-food homemade goods online, tutors a few students, runs a small consulting practice. For a lot of those, an endorsement closes the gap for a small amount of added premium. But carriers put limits on who qualifies. Many of these endorsements cap the number of customers who can come into your home, they cap the number of employees, and exclude certain higher risk activities entirely. So the endorsement is the first step up, not the universal answer. It fits a specific kind of home business well, and once you outgrow those limits, you've moved to the next step. When the business gets bigger than an endorsement can handle, the next step is usually its own policy. The common one for a small business is called a business owner's policy, or a BOP. You'll hear people say BOP. A business owner's policy bundles together the core coverages most small businesses need. General liability, which handles claims that you injured someone or damaged their property. Commercial property coverage for your business equipment and inventory at much higher limits than a homeowner's endorsement would offer. And business income coverage, so if a covered loss shuts you down, the policy can help replace the income you would have earned. This is the right move when you've got real revenue, real equipment, customers coming and going, maybe an employee or two, or a product that carries more risk. The home bakery doing 20 cakes a month with food product exposure and customers on the porch every weekend is probably past the simple endorsement conversation and into BOP territory. The coverage is broader, the limits are real, and it's built to actually carry a business rather than to make room for a small one inside a personal policy. A business owner's policy also tends to be where product liability becomes a real consideration. If you make something people eat, wear, or use, and it hurts them, that's a product claim. And a serious food business wants that handled deliberately. And that's before you even get into health department licensing or cottage food rules, which are separate from insurance. Some home-based businesses grow past what a business owner's policy is designed for, or they do something a BOP won't write. A high revenue operation, several employees, a commercial vehicle used for the business, professional services that carry their own specialized liability, that's when you move into a fuller commercial program. That can mean a commercial package policy. Commercial auto if the vehicle use rises to that level, workers' compensation once you have employees, and professional liability if you provide a professional service for a fee. At that point, the home is almost incidental. You're running a real company that happens to be headquartered at a house, and the insurance should look like a company's insurance. Most people watching this aren't at that level, and that's fine. The point of laying out the whole staircase from the homeowner's policy to an endorsement to a BOP to a full commercial program is so that you can see where you fit. You find the step that matches the business you have today, and you move up when the business grows into it. Here's one that catches people, and it's worth its own minute. Your personal auto policy has a business use question on it too. If you're using your vehicle to deliver products, make pickups, or run regular business errands, that's a use the personal policy may not fully cover. A lot of personal auto policies are fine with normal commuting and incidental use. Where it gets murky is regular, predictable business driving, hauling cakes across town every weekend, making deliveries, using the vehicle as a core part of how the business runs. If a serious accident happens during clear business use and the policy wasn't written for it, you can have a coverage problem at the worst possible moment. The fix is just a conversation. Tell your agent how you actually use the vehicle, and they'll tell you whether your personal auto is enough or whether you need a commercial auto policy or an endorsement. It's a 5-minute chat that keeps a delivery run from turning into a coverage fight at the worst possible moment. So how do you know which step is yours? You don't have to figure it out alone, but here's the shape of it. Ask yourself a few honest questions. How many customers actually come to your home? How much is the business worth in equipment and inventory? Do you have employees? Do you make a physical product that could hurt someone? Do you use a vehicle for the business? And how much income would you lose if you had to shut down for a month? The answers point you to a step. Light activity, low traffic, modest equipment, that's endorsement territory. Real revenue, customers on site, an employee, a physical product, that's business owner's policy territory. Bigger than that, and you're into full commercial. And you don't have to grade yourself perfectly. You just have to be honest about what's really happening at the house, because that's exactly what an underwriter would look at. And this is the real takeaway. The worst place to be isn't on the wrong step. The worst place to be is assuming your homeowner's policy has handled it when it specifically says it doesn't. Almost any of these fixes is affordable. The denied claim is the expensive part. If you're running anything out of your home, even a small side operation, take a few minutes and have this conversation with your agent. Tell them honestly what you're doing, how many people come by, what you've invested, and how you use your vehicle. From there, it's usually a straightforward decision about which step fits, an endorsement, a business owner's policy, or something more. We're an independent insurance agency based here in Nevada, and we help homeowners and business owners in Arizona, Utah, and California too. Because we're independent, we can look at your home, your business, and your auto together to find the combination that actually fits instead of forcing you into one company's box. If you want us to take a look, the link to request a quote is below. Subscribe to the channel. We publish most business days, and what we cover is for individuals, families, and business owners who want to understand their insurance before they need it, not after. Thanks for watching.